Hello, investors. It's Don Vandenbord, Chief Investment Officer with Revere Asset Management. Today is Thursday, September 25th, 4:47 p.m. Eastern Time, coming to you from St. Augustine Beach, Florida, with tonight's Revere Roundup Daily Market Insight video. Market state, we continue to be in an uptrend. Tough last few days in the market, however. Check the trend gauge over here. We've got the appearance of several yellow sub arrows, most notably on market leaders. A lot of them got extremely extended after straight up moves, and a handful of them have pulled back 20% over the last 4 or 5 days. Most still, these pullbacks, though, still holding the 21-day moving average for the most part, a few breaking, but it's really just a harsh pullback after a strong run up. And this is why one of our offensive sell rules is always to book some gains on the way up so that you do not give back the quickly made gains, because that never sticks around. What goes up must come down. The question is, when will it come down, and how hard will it come down? Also, a yellow sub arrow on our short term trend indicator across the moving averages, as the equal weight S&P 500 and mid cap indexes are below the 21-day moving average. Medium term and long term, still green arrows there. So what happened today? More weakness in leaders, as I mentioned before, but the indexes, after a gap down early, tried to put in a low and rally. Had a second afternoon harsh pullback, but the bulls came in right at the 21-day moving average on the S&P 500, Nasdaq 100, and Russell Small Cap. So that makes today's lows critical, as they coincide with the 21-day moving average. As you know, that is our short-term trend health indicator, and holding for now with those three big indexes that I mentioned, but always be prepared either way. So 3 days down, typically after a 3 day move, there's some sort of a relief bounce. This has been a pretty after a strong move up, you're going to come down. The question is how hard, as I said, and how long is it going to take? But 3 days down, testing the 21-day moving average, we held where we should on these, on the Russell, the Nasdaq, and the S&P 500. Mark those lows as line in the sand. So here are the numbers: 21 over 21, down about 2/3% on average, 7 up, 2 neutral, 12 down. Turbo 12 down 1.8%, 3 up, 9 down. The big eight down an average of 0.68%. The RG8, this is our eight growth ETF composite, down an average of 1.1%. S&P 500 gap down 0.5%, closed down 0.5%. Equal weight down 0.8. NASDAQ 100 gap down 0.8. Only closed down 0.4, so a little relative strength intraday there. Equal weight NASDAQ 100 down 0.5%. Dow down 0.4, mid caps down 0.6, Russell down about 1%. Global 60/40 down 1/3%. Flagship GROTECTION portfolio down 0.8. Turbo, another good day, down, but just barely down. LEU and MP, two big positions, had strong days today, cushioning some of the names that got stopped out on that portfolio. We'll talk about our portfolio changes when we get to the tail of the tape. Reminder, please like, share, subscribe, especially on YouTube. We want to get our like count up there, get our content out into the streams of people that are looking for investment help. All right, let's start off with the S&P 500. And you can see, after, let's draw some lines, after our breakout here about 3 weeks ago, strong run up, one test of the eight. We tested the eight EMA yesterday as well, breaking below it decisively today, but bouncing right at the 21-day moving average, just as we would like it to continue the uptrend. Didn't quite touch the 21-day on the NASDAQ 100, same situation, breakout about 3 weeks ago, third day of a pullback. Let's look at the equal weight S&P. This is not looking good. Sitting on the 50-day moving average, actually undercut it intraday, but after holding at the 21 for 3 weeks, despite the relative weakness, giving up the 21 today, sitting on the 50-day moving average. Let's take a look at the Dow Jones Industrial Average, bounced also at the 21-day moving average. Mid cap index This usually moves align with the equal weight S&P, no exception this time, bouncing at the 50-day moving average, breaking the 21-day moving average. And finally, the Russell Small Cap Index, which had been leading for 5 weeks, lagging a bit over the last week and a half, but also holding that 2,400 level and the 21-day moving average, 3-day pullback there as well. So those are the major indexes. Let's take a look at some inter-asset correlation. We will start with the VIX. As you might have expected, the VIX popped up today, closed off of its highs, but up 3.5%, still with a 16 handle. We're okay with that. The dollar has been strong over the last week and a half, kind of coinciding with this pullback. Dollar breaking above the 50 and 21-day moving averages today, but it's not slowing down the precious metals. Gold up by about a 0.5% today, holding the 8 EMA. Gold stocks also holding the 8 EMA, up 1.1%. Silver higher high, up 3%. Bitcoin, some problems here, breaking down to the low of the range now, below the 50 and 21-day moving averages, which have rolled over. In ETHA, we stopped out of that today after holding the 50-day moving average for 3 days, a gap down, clear break of that 50-day moving average level. On to bonds. Broad bond index closed at the top of the range today, basically flat, but breaking the 21-day moving average. The long bond TLT undercut and reclaimed, basically closing flat today. Where are we with yields? That's basically flat as well on the 30-year and the 10-year yield up 0.6%. So yields have been spiking on the long end, the 10 and the 30, since the FOMC last week, interestingly. One of the problems with today was that strong data came in, and I'll segue into the tail of the tape with that. Before the open, GDP was above expectations, durable goods above expectations, jobless claims below expectations. Good economic news lessens the chance and frequency of rate cuts. The market sold off a bit on that before the open. Tomorrow morning, we get a key inflation number, the PCE. So keep an eye out on the reaction to that. Stochastics on a daily, all of them have rolled over for the six indexes and the RG8. NASI flat, trying to roll over. Percent of stocks against the 5-day toward the low end. If it gets down to 20, it's sort of a secondary buy signal. We're down to 33 here, and it's Thursday, so we got updates on our sentiment indicators. AAII bulls unchanged at 42%, bears down 3 at 39%. So first time in a while that the bulls are actually higher than the bears on AAII. On the active investment manager sentiment indicator at an 86, ticking up at a 1. This is we have it flagged in yellow. If it gets up toward 100, it's a contrarian sell signal. So keys coming into today, we were watching the indexes against their 8 EMAs and all-time highs. All of them broke the 8 EMA, so we'll adjust our keys for tomorrow to look down at the 21-day moving average. Day count, third day down off the high, 8-day moving average after 16 up days, the first day down and the slope did roll over. 18 days up on the 21-day moving average after a bounce at that level. That keeps our expectations positive as short term as long as we're holding that level. Let's see. How did the sectors do? Not much up, but it was commodity based. Oils, uranium, gold, silver, and gold and silver stocks. 10 of the 11 spider sectors were weak today. Some changes to the portfolio. On the weakness out of the gate, GROTECTION sold TNA and ETHA. After that bounce off the 21-day moving average, we added to our SSO position, and SE and GEV stopped out of those positions as well. 1.35 volatility adjusted beta, 4.9% balance at risk. Changes for turbo as well. Offensive trim on LEU. Nice to be able to do an offensive trim on a weekday. And some sales stopped on Rocket Lab, IREN, ETHA, and BE. Trimmed TNA 1.52%, volatility adjusted beta 5.8%, balance at risk. So the bottom line on the day, leaders weak again as the indexes were down 3 days in a row, but testing and holding the 21-day moving average. Likely a bounce off that level, no guarantees. PCE in the morning might have a lot to say about the direction of how we close the week. And the keys going into to Friday will watch the 21-day moving average on the S&P, the NASDAQ 100, and the Russell. We break that level, we'll be getting more defensive. Let's take a look at some charts and we'll take a look at what we hold in the portfolios, starting with the 21 over 21. So Robinhood continues to hold up very well, closed on the 8 EMA today. Tesla, rough day down, but it's been rallying, sitting on the 8 EMA, but down 4.4% today. Dash bounced at the 21-day moving average. MP, very volatile day. Big gap down, then a big run up, got to the top of the base and pulled back. Relative strength at a new high before breaking out of a base. This is one you got to own. Palantir, with a stop, of course. Palantir undercut reclaimed the 8 EMA, NBIS normal pullback after recent strength, and CoreWeave pulling back, sitting on the 8 EMA. A lot of volatility on this one today. What did we get stopped on? Let's take a look at SE. Three closes below the 21 day and the 21 rolled over. Booked our gains on that. Reddit, we sold this yesterday. Now three closes below the 21-day moving average. Let's go to Turbo. The Turbo longs. Now, some of these we've been stopped out of, but we'll go through them. There's A Lab under the 21-day moving average. That's no longer in the portfolio as we got stopped on that. Actually, no, still holding a piece of that. Correction. Some big gains in that as this was bought early. So holding on to the runner there. BE stopped on that today. Tesla still holding, sitting on the 8. Hood sitting on the 8. Tempest breaking the 21-day moving average. That is no longer in the portfolio. That was stopped out earlier. Baba, normal pullback, continued strength. ETH stopped on that. Solana stopped on that. LEU offensive trim today. MP Materials volatile, and IREN stopped on that today. Booking gains, kicking butt, taking names, booking gains. That's Ted and Connor in TurboTection. And with that, I will wrap it. As always, like to hear from you. As always, you can reach out to me, email don@revereasset.com. If you're interested in becoming a client, click contact us on the webpage or email dan@revereasset.com. Or you can call us 855 Real Wealth. That's 855-732-5932. Our flagship portfolio, GROTECTION, still ahead of the S&P 500 year to date. And our newest portfolio, TurboTection, really kicking butt over the last 3 weeks, having a great month of September. Both designed to grow assets during uptrends and protect them during downtrends. Full transparency, every trade discussed on our nightly videos. And with that, I will wrap it for Thursday, September 25th. This is Don Vandenbord with Revere Asset Management, telling it like it is. It's not how much you make in the market, it's how much you can keep. Some stops taking us out over the past 3 days. That's the how much you can keep part of our strategy. And that'll wrap it for Thursday, September 25th. Thanks for watching. Have a great day.